Welcome to Markets Now. I'm Michelle Rick along with Matt Bennett with agmarket.net. We ended mostly higher over in the livestock on Friday with the grains mixed. And Matt, of course, post report sharply higher in the soybeans after that big 4 million acre cut in soybeans. How do you work that through the balance sheets? Where do you think we need to be from an ending stocks perspective now?
I'll tell you what, 83 and a half in the balance sheet right now it's just it's pretty hard to come up with a positive number unless you just have a massive yield. And I know a lot of folks say, oh, we've been in a drought, but it's early to be talking any sort of weather market for beans. We felt like that huge run up in the bean market was a good selling opportunity before we turned around and sold the thing off dramatically again. I mean, it's been a roller coaster, let's face it. But looking at the balance sheet, that's what you asked about. And the balance sheet, by all means, is going to be as tight as can be. As far as domestically, the U.S. balance sheet will be tight. World balance sheet's different, though. You've got a fair amount of beans in the world. Brazil just harvested a massive soybean crop. They're going to plant another big soybean crop. So producers need to understand that this isn't just a U.S. situation. We've got good demand. We've got good demand coming. But the bottom line is that we're not the only game in town.
But does it still infer that we need to be over $14 on this November bean?
Well, sure. Michelle, if we say, that we need to go back up and make new highs in the market, I'm afraid that what might happen is if we go to 14, people will be talking about 15 and so on. My personal opinion is that you don't have a lot of chances to sell beans when they're up 75, 80 cents like they were here on Friday. Do you go out and sell a ton of them? I don't know about that, but an incremental sale at a time whenever you can make yourself significantly more profitable than what you could 24 hours ago, is something we don't get a chance to enjoy all that often. So managing risk in a big time upward market is something I think we need to be considering and not get too wrapped up in just how high this thing can go, because a lot of people tried that with regards to the corn market. It didn't work out so hot here lately.
Right. So on the corn side of the equation, acreage wise, we did get an increase over the March intentions by over 2 million, but as 5.5 million over last year. Did that surprise you that we were up as much as we were or not?
As far as corn acreage was concerned, I was surprised. Obviously, most producers put a very expensive crop in the ground. I'd say by most accounts, the average producer put the most expensive corn crop in the ground that they've ever seen. And so, obviously this spring price was moving lower at a time that producers apparently made the decision to plant more corn acres. So I thought that was a bit of an interesting situation. Now, in the past, anytime the weather was good in the spring and you had a chance for rapid planting pace, typically you'd see corn acres, increase. People would just keep on planting corn. But the reality of the situation in 2023 is a lot of producers start planting beans before they plant corn, or they'll start planting corn and beans on the same day. I was just very surprised that the decision would be made from the March planting intentions to the planted acreage, that you would see that sort of a shift given the factors that we saw as far as markets were concerned. So it was a very interesting day coming up with that kind of an acreage increase. I'm not sure I'm totally ready to just stamp that, but that's the number we're going to trade regardless of what people's opinions are.
So again, what does that do for ending stocks, especially now that we're talking about lower yield? Does it offset that?
It's just a lot of moving parts, Michelle. So I don't want to dance around your question. If you plug 94 million acres instead of 92 million acres, there's no question that it gives you more wiggle room. It gives you more breathing room. That if this crop is a low 170s type crop, you don't necessarily need to rally through the roof. And so you're going to have a really hard time getting this carryout below 2 billion bushels. You're going to have to work overtime and continue to see weather issues, and if you start increasing crop ratings, for instance, and I'm not a huge fan of crop ratings, but they get traded. Let's be fair about it. If you start increasing crop ratings from the 50% we saw this past week up to 55, 60%, this market is going to struggle mightily to be able to post any sort of a rally effort. So it's going to be very interesting to see what the weather does moving forward. But my balance sheet right now, I can't come up with something less than 2 billion bushels as far as carryout's concerned.
Yeah, and we haven't even talked about demand, because that's another problem here, isn't it? That keeps that balance sheet pretty loose.
It is. Whenever you look at exports, we're just not exporting anything. I mean, it's just absolutely pathetic what our exports, sales and inspections have been. Our new crop bookings, not good whatsoever. It seems like demand is just all but vanished. We know that whenever we take prices high enough, typically it curbs demand, but we increase supply. Those two things both happened, and that's the last thing you want to see in the situation that we're currently in. So I think moving forward, we have to understand that the thing that's going to save this market, given the fact that demand's not going to do much for the market as far as an upward move, it's going to have to be a supply-driven situation. So if you don't have a major weather issue, you're really going to struggle to rally this corn market. You might say, "Wow, the bean market is going to drag it higher." Hey, beans gained $1. New crop beans versus new crop corn over $1, like $1.10 on Friday. So that's a huge move whenever you look at one versus the other. Yes, beans could support corn to an extent, but be careful as to think that it's going to a great extent.
We took a lot of weather premium back out of the corn market this week. Do you think that it was warranted? I mean, have these rains and the forecasted rains, if they materialize, does that change, what we're looking for in terms of these yield losses everybody's been talking about?
Yeah, I don't think that, for instance, the state of Illinois got widespread enough rains throughout the state to be able to bolster, for instance, what's the most challenging state that we've got right now, 26% good to excellent this last week. Is that going to increase this next week, or is it going to not be as bad? Are you going to see good to excellent go up to maybe 30, 35%? I think it's possible by all means, but at the same time, whenever you're this dry, it takes more than one rain to be able to break that dryness. Unfortunately, we saw a derecho event move across as far as Thursdays was concerned. We were impacted on our home farm by this. Fortunately, we didn't have a ton of down corn, but we do know there's a fair amount of down corn in multiple states. It's nothing like 2020 in the state of Iowa, but whenever you have that much dryness, breaking out of it sometimes comes with a heck of a lot of weather that you don't really embrace. And that's exactly what we saw this past week. So it's going to be interesting to see. My personal thought is that we've still got a ways to go to start feeling good, that we could be even above 175, because there's a lot of crops that are super stressed and have been for the last several weeks.
Yeah. Until we know more about yield, will this market be able to hold $5 on corn, or are we looking at sub 5 now?
It's going to be hard. It's going to be hard. I think you're going to go down there and look at that 4.90 3/4, the low that we saw. Michelle, the really challenging thing and frustrating thing for a lot of producers is, once again, this is a very expensive crop that we've got in the ground. And if you're in a situation where you're looking at like a sub APH type yield, it's really not something that you want to see with the market moving lower. Now, I would say, looking very far into the future, the last thing that you want to see is December corn anywhere close to 5.91 this fall. The farther away you are from it, the better off if you're in a challenging yield situation, because then you'll be able to maybe count on a little bit of income from your insurance situation. But by all means, this is a very challenging situation we're in. And I think that you're probably going to go back, test those lows. Can you get below them? I don't know. If beans are going to make that move towards $14 like you were suggesting, it's probably going to be hard to get below that low. But at the same time, rallying anywhere close to where we were just 10 sessions ago is looking very much unlikely at this point.
So the wheat balance sheets tightened just slightly. Acreage was down just slightly. But, with demand as poor as it's been, is it going to matter? And especially if corn keeps going down, does wheat have a prayer?
No, probably not. It just really probably doesn't. I mean, the thing is that obviously the balance sheet a little bit tighter, as you say. Acreage was a little lower than what I thought it might be. But bottom line is, you're really going to struggle, especially given the situation with corn, to be able to get this wheat market to take off and go. So I really don't see any big story there. In my opinion, I think wheat's probably going to be very stagnant. And the path of least resistance, if corn continues its dismal performance like we saw this past week, is probably going to be lower as well.
Is this a game changer for the cattle market too, if we have corn down at this level, because we're going to have a big week on the feeder market, and it's really a result of corn pulling back here? So, that correction that we just saw recently might be over, you think?
Yeah, it probably is. I mean, I've had the horns on for quite some time in this cattle market. The thing is that to really get this thing to blow up and, maybe see some $200 fats on the board, which I still think is a distinct possibility, I think you're going to have to see folks talking about in the next several months retaining heifers when you get out into the Western Corn Belt where the bulk of the cattle are. But by all means, when you look at feeders, good luck trying to buy feeders whenever the corn market's down 30, 35 cents, and obviously really struggling here. It gives people renewed optimism. They can step in and pay a premium for these feeders, especially whenever you see the fat cattle market on out to April at some of the levels that we've seen. We're going to probably trade that 190 level, in my opinion, for starters. Now, again, can we push towards 200? I think that a blow off top's probably going to happen sometime in the next several months. Maybe we have to get closer to the calendar end, but I think that if you continue to see the weather improve, I have a hard time believing that you're not going to see some levels that most of us aren't necessarily, or a lot of folks aren't necessarily expecting.
Yeah, this definitely changes those crush margins for sure, right? Thanks for joining us. That is Matt Bennett with agmarket.net and Markets Now.